welcome to Markets at Noon with me, Ankur Mishra, Sajit Mangat and Kanishka Sarkar. Sajit, let's get started on a note on LG Electronics. We are seeing a pressure on the stocks around 2% down, and we also have management to discuss the earnings. Sajit, over to you.
Thank you, Ankur. The numbers have been a little muted in Q2, and it's mainly to do with some of the GST deferrals which has happened during the quarter. And we have now joining us Mr. Sanjay Chitkara, who is the chief sales officer, and Mr. Atul Khanna, who is the chief accounting officer. Gentlemen, thank you very much for joining us today. A top line of 1% growth, but pressure on EBITDA and EBITDA margins. How do you sum up the quarter for yourself?
See, our industry was already facing various external challenges. Like this year, we faced cool summer, geopolitical tension, and the escalation. But in Q2, the GST cut ended on 22nd of September. So almost 1.5 months, the sale was paused. Not only customers, but partners also deferred their buying. And once the GST execution happened, the sales again started. So there is no fundamental issue with the brand health or company business or India demand. It is just a timing shift. And during this period, we within 1.5 months we covered 3 month sale, registered a 1% growth. Our EBITDA is also 8.9%, 5.48 billion INR we produced as a profit. So that's again an industry leading figure. And during this period, we strengthened our leadership. Our market share for TV increased by 1.4%. Refrigerator market share improvement is 1%, and air conditioner 0.5%. So our brand strength is further improved. Everything is in line, and we are ready for next quarter growth.
Mr. Atul Khanna also into the picture. Mr. Khanna, EBITDA margins hit by elevated commodity prices and go-to-market strategy. Do you think that this would continue in the subsequent quarters as well?
As you see that in quarter 2, majorly the GST impact was there, where there was a deferment of decision making by the consumers as well as the trade partners. And during this quarter, we have invested to go to market in initiatives and consumer promotions, which we offer to support our partners and build momentum in the market. So we are foreseeing that with the upcoming quarter 3 as well as quarter 4, we are working on to improve the localization of components, our improving our operational efficiencies, looking for a stronger growth in the premiumization, as well as some rationalization of our consumer promotion offers also into the market, considering the market dynamics going forward. Our outlook for particularly focus on our B2B business as well as revenue of service income would continue. We would be coming up with new launches also. And we launched our LG Essential series also for the first time buyers and entrepreneurs with a more affordable and premium, particularly category of mass premium product for them.
How are you looking at the EBITDA margins? 8.9% EBITDA margins versus 12.4%. What is the trajectory to get back to that 12% plus EBITDA margins for you?
See, this particularly decline of almost 3.5%, which was particularly
So actually,
because
there is
of
issue in our margin.
Yeah.
So our margins are still industry leading, which is the 8.9% EBITDA margin. And we were normally operating at 12-13%. So we are foreseeing that we would surpass this 8.9% in the coming second half of the fiscal year by rationalizing some consumer promotion offers, some price increase in some of the categories, considering the market dynamics, and our focus on our localization increase so that we can remove the FX volatility as well from on our business.
You saw some market share gains in two segments, TV and refrigerators. Uh, do you think this gain is sustainable, given the fact that you had tailwind of GST cuts and a lot of people purchasing towards the end of September? Have you seen a lot of deferrals of sale happening going into October and November as well?
See, as I mentioned, our market shares are increasing. And if after 28 years we are increasing and improving our market share, it shows that we have not built our company on a short-term disruption or short-term strategy. It's been driven by a long-term strategy. In September month market share, uh, our brand strength was touched its highest peak, where we increased the gap with number two player with the historical height. For TV, the gap with number two player in September market share result increased to 6.7%, and refrigerator it is 6.2%. And if we see our washing machine market share, it's already touching around 16% market share gap with the number two player. And AC also, we were not number one player last year for overall air conditioners. We were number one player for only inverter ACs. But this year we have achieved the overall market leadership. So that's showing that we are on a right path, and definitely we will try to surpass our current market share.
How do you see Q3 panning out in that sense? You had Mr. Khanna talking about that, regaining some of the EBITDA margins that had to be, foregone because of multiple issues, commodity prices or go-to-market strategy. In Q3, with such momentum coming in for you because of GST and the gain in market share, do you think that, the top line growth would be much better?
See, market, we never pursued any short-term margin tactics, I have mentioned. Our strategy is always for a long term, because in a business, actually the market share drives the revenue and revenue drives the profit. And with our improved market share, we have further expanded that advantage. As Atulji mentioned, we have also taken a price increase recently for in a tune of 1.5 to 2% for refrigerator and washing machine. And we have also rationalized our promotional intensity, which we were doing during the festival period. And our ongoing localization will further support our margins. You will see better results in coming quarters, definitely.
Can you also give us an idea of the kind of normalized EBITDA margins for you? Because this is the first quarter after your listing. In FY25, you ended at over 12% in margins, EBITDA margins. Are you going to end FY26 with over 12% EBITDA margins?
See, we cannot, as a regulatory issue, cannot give you the forward-looking numbers. But what we can tell right now that 2022 financial year, the growth rate has been 13.1% CAGR growth. Our EBITDA also have been in double digits. So being a sales leader, definitely we will try to touch our previous sale growth rate and EBITDA margin. And definitely you see an improvement in both the areas.
So working on widening the entire price spectrum, I mean, going into essentials and premium. Can you also take us through this strategy? How will it work? Are you looking at volume as well as a value growth because of premium?
See, we are already market leader in premium. Our leadership in premium is much better than our volume zone, though our leadership is there in volume segment also. That indicates that LG is a brand choice for across all the price point. Now we decided that we'll share our premium leadership of fully automatic washing machine or frost-free refrigerators to the entry-level customers also. In this, we launched recently Essential Series, which is a combination of India Insight and necessary feature at a much more reasonable price. But despite of reasonable price, that combines the same holistic experience of LG trusted brand, our quality, robust body, and as well as the after sales service. So nowhere we have compromised. And during Diwali period, we introduced two SKUs, one in 8 kg front loader washing machine and 225-liter refrigerator. And within this year, this calendar year, we will introduce two more models in washing machine and two more model in refrigerator. And the early response is very good. Uh, we are getting very good response. It will help us to reduce the fixed cost burden on our sale, and it will also help us to improve our market share.
My final question to you, Mr. Chitkara spoke about the fact that, how he's looking at sales to boost growth there. What are the levers that you have with respect to getting back to those double digit EBITDA margins? Mr. Sanjay?
Yeah, so as I mentioned, the growth, the mainly your profit comes with your revenue growth and revenue, and your market shares drives the revenue. So that where we are expanding our advantage. And recently, as I mentioned, the price increase we have taken, and ongoing localization will definitely help us. See, our biggest strength is our in-house production of compressors, heat exchangers, PCBs, and other sub-assemblies that are giving us the competitive edge. Recently, we have also done the localization of TV module. Earlier, it was totally 100% import. So all these drives and projects are going on, and these all things will accumulate a better EBITDA margin improvement in coming quarters.
Mr. Chitkara, it was a pleasure talking to you today. Thank you very much for joining us today on ET Now. That was the LG Electronics management talking to us on the earnings, and hopeful that they will go back to those margins in the subsequent quarters. Do keep watching ET Now, and we'll be back after a short break.